Hello everyone, welcome to Accounting 312. In this video, I want to talk about chapter 13, the handout, the practice. I also have the textbook, as I say, chapter 14, 13, 12, you will have a lot of concepts from textbook. So I also have a textbook here. But in order to save time in the video, I don't want to go to the specific page, but I believe I put the page number in my note in the blackboard. So if you want to go back to textbook, make sure you still read textbook the concept. So now let's get started from the first multiple choice. Which statement regarding the influence of demand and supply is wrong? So we talk about there are three things affecting the product demand and the supply, which will cause the pricing strategy, different. We said cost, right? Cost, computation, and then customer. So cost basically decide the supply, because if it's too expensive to supply, people will not even do it. So if cost goes up, supply will go down. Customer basically decide the demand, customer demand high, then you can charge a higher price. Competition kind of in the middle. Textbook said it affects both sides. Customer influence price through the demand. Okay, this is correct. Cost influence because they affect the supply, So choice B is the wrong one. Next one, which is not the purpose of cost allocation. Provide information, yeah. Motivate manager, yeah. Justify, yes. Prepare for customer, no. It's not for customer profitability analysis, it's for the income statement or balance sheet. Choice 3, value engineering. Process of building a new, no, it's not about new product. It's process by which company analyzes own process to reduce cost. Kind of correct, I will keep reading. Process by which systematic evaluation of all aspects. I believe this is the proper definition. Okay, talking about this, okay, so I would say this is not a perfect question. Personally, I think choice B is okay. But if it's in the exam, always choose the best answer. So it's not just to reduce cost, but it also maintain the quality, I believe. And then it's just choice C is fancier, and then it's really the proper definition from the textbook. Okay, but let's say if choice C is wrong, let's say value engineering is you study hard for accounting 312, then in this situation you will choose the answer B. But in the exam, make sure get the best answer. The first step doing target pricing, we talk about that kind of in the video. I said you first need to get a product that will meet customers' demand. Okay, that product that, okay, so answer is C. Next one, question 5. You manage a product that has this, fix this, allocate this. 25% of markup should be the selling price. Okay, so we talk about selling price for the long term. So long term is all the cost plus the markup. Have a variable cost 25. Let me see the number. Selling price is this. So we need to get the fixed cost. Okay, fixed cost is $1 million, and then so this is a variable cost. Allocated fixed cost will be $1 million divided by 200,000 gives me $5, and then I plus my markup, and then this is my cost, but then I need to 1.25 because I need to mark up by 25%. Okay, so will be 30 times 1.25. Give me 1 second. I think you already have the solution, but hold on, just give me 1 second. Okay, so 30 times 1.25 gives me 37.5. Oh yeah, got it. Question 6. Let's see. After conducting market research, you decide the product, new product this, that new product this. Target operating income is 20% of sales. What's the target cost? Okay, so the target. So you have the revenue minus cost gives you operating income. But for the market-based approach, market already decided by the selling price for you. Selling price is 240 for each one. Then you are selling 21,000. And then you want 20% of sales will be your income. So your 20% of your 240 times 21,000. So market already decided the revenue selling price. You require the operating income. So you derive your target cost. You derive your target cost. So let's say, so that basically is 80%, right? So that's basically 80%. Let me see whether I get it, yes or no. So it's 240 times 21,000 and time. So I got the answer for 32,000. I hope it's the right answer. Check the answer later. Question 7. Question 7. Current has this and then that. So let's say, okay, your current, okay, so it's still your revenue minus cost gives you operating income. Your current sale as a 380, cost 290. Operating income will be 90. Competitor decreases, so you want your selling price to be 320. And then your total will increase by 10%. Currently is 120,000. What's the if you want to the same income level, right? So if you want to make the same income level, your each one is $90. Currently you are selling 120,000 units. Okay, currently you are selling. So your total operating income will be 90 times 120,000 units, 120,000 units. So it will be 10, hold on. 90 times 120,000. Oh, 10,800,000. You want your total operating income is the same, right? You want it to be the same. But now your revenue will be 320, your new selling price. But you time the new units 120,000 times 1.1 because increased by 10%. Okay, so 320 times 120,000 units times 1.1. So your total current revenue is 42 to 40,000. Then your operating income is this. Your operating income is this. So your targeted cost will be, I don't need to do this. I don't need to do this. Sorry. You can do that. You got your cost and divided by your units. But I didn't need to do this. Sorry, I didn't need to. I just use for each one. Sorry, I backed up. Okay. So your each one selling price is this. Your total operating is this. But your total, this is out of 120,000 times 1.1 units. So this is your new units, 120,000 times 1.1. So this is 132,000 units. Okay, so you want to earn 10.8 million over 132,000, 10,800 million divided by 132,000. So each one you want operating income is 81.81. And your selling price is 320 minus 81.81 gives you 238.18. Okay, so it's basically 238.18. Okay, this one is a good one. Personally, I think it's a good one. Next one we finished question 10. Basically, we are done for this video. I don't want to make too long video. Next one, this, you want to reduce this, your very current interest. Okay, so the same idea, right? The same idea. So your order cost before price. So your this is 60 minus your cost is 10 plus 20 plus 10 plus 8, 48 gives you $12 as your each one the operating income. And then it's out of 200 units, so we time 200 units, 48, 200 units. So your total will be 2,400. But now you have 240 units, so each one, the income will be $10. And your selling price is 55, right? Your selling price is 55. So you get your cost will be 45. I believe that's the right answer of target cost is $45. Okay. Next one. Question 9. You have current cost. Cost is this. Revenue minus cost gives you operating income. Cost is 700,000. Target operating income is 80. So your selling price has to be 780. And then you want to cut the price by 25%. You want to cut the cost by 25%. So your new selling price 780 times 0.75. So this gives you 585 as your new selling price. You want the cost to still be you want the operating income still be the same. So your new cost has to be 505. Your new cost has to be 505. Last one in this video, okay, we do the other method in the next one. Best opportunity for cost reduction is, we said, better to make your decision before the cost is locked down, is locked in. So which is the research and designing, which is R&D, which is R&D, design, which is the R&D, which is the R&D. This is the best way, you know, before you lock in the cost. Okay, I think I stop here. As I keep saying, I don't want to make a too long video. So next video, we talk about the other part of the cost plus approach. Let me know if you have any question. Thank you. See you next time.